Okay, so hi guys. What do we have on silver? Today is Wednesday, and it's been a pretty good week on gold. Took my first position on silver yesterday. Yeah, I took my first position on silver yesterday. I've just been following the narratives. I just want to show you guys what has happened and what I'll be expecting on silver today and for the rest of the week. So on the daily time frame, we can as always, I always want to like understand my trend and all of that. And on the daily time frame, it's quite obvious that we're bearish. If you just try to connect the dots, you see this. And yeah, sometimes if you're not really sure, you can just pull out your EMA. Your EMA will give you some sort of guidance to that EMA 21. And up will be a bearish. And the range also, we can see that we've broken to structure to the downside, multiple week of structure. So yeah, we're bearish. The next thing you want to do is you want to mark out your point of interest, right? And from here, you can see that the multiple points of interest that could have been marked would be this breaker that also covers the, let's mark all of this. Let's just use that to mark everything. So this is the point of interest that you would have been looking at. However, I also marked out, let me put this because this has not been mitigated. So, however, I also marked out this FVG from this area to this area, right? Because all this means, or the reason why we're marking this is because of draw on liquidity. Whatever can serve as a draw on liquidity this is viable to be used as a reactionary point. And on this area, draw on liquidity is this week high, this daily high rather, which is a major liquidity being pushed, and whatever is above it as a point of interest can be used. So price used this fair value gap to react, and we don't just determine a bias just from that point of interest. We want to see actually an alignment on the median time frame. And if you go to the 1 hour, let me use 2 hours. If you go to the 2 hour time frame, you can see that on the median time frame, the trend, its own trend was actually bearish, right? So we had price pushing to the upside and creating higher highs and higher lows. You can see from here price was pushing higher before then reversing to the downside. Now we I came into the market and saw that this was something that was of my interest, and I saw that price actually did this, which is take out this low, right, and created some sort of Quasimodo, and then we also add inducement this because this is the hourly time frame. I'm not necessarily waiting for a structural retracement and a break to the downside. A single candle inducement for me is enough. So after the single candle inducement, the next thing I want to pick out is my point of interest. And on the 2 hour time frame, you can see this was the low that was broken, and this is the body of that candle. So for me, this whole area was my point of interest. The whole area to the eye was my point of interest. And then obviously stop loss entry here, stop loss. Now when I use this kind of entries, I don't use the eye of the candle of the breaker itself. I use the eye of a candle that is higher than the breaker. So something like this. So yeah, this was my entry. And it being the first entry, it is going to be taken to the lowest part of the range, or more likely the trend line liquidity. And because in this area we don't sort of have a trend line liquidity that can be used apart from this, and this is the last point, so obviously it is still the same area, right? So, and if you check all mitigations, every area in this area has been mitigated. There's no like sort of fair value gap or whatever that could reverse price. So that's for my reversal entry, first entry. However, price kept, so now all we're going to focus on is continuation entries on the 1 hour time frame or on the 2 hour time frame. And you can see here that second entry I got from silver, and this was I didn't get this. I didn't actually take this because I was not on seat. And this is just how I entered the market and how I could follow the narrative. So we had multiple break of structures to the downside, right? And this just told me that price would want to, give some sort of retracement, especially after this inducement right here. So we had everything set, and the next thing to do is to look for your point of interest. Now, whenever my higher time frame and lower time frame is aligned like this, I tend to like just take direct entries, especially when it is like just two POIs or one POI that I get. But here we have multiple points of interest. We have one here, we have one here, we have another one here, and finally here. So because they are all, available to be taken, I would not take a direct entry. So obviously price reacted from here. So I'm just going to fast make this fast because I wasn't on seat when this happened. But when I came, I saw that price had mitigated this point, and because I'm looking for a confirmation entry, you have this and you have this. Let's just make this fast, and then obviously this, and then if you go to the 1 hour time frame, you have your entry at this bodies around that is above. So again, stop loss at the breaker entry at a candle that is higher than the high of the breaker, which is this. So yeah, we have that. Now because this is the continuation entry and this is where price is coming from, I'm not looking to take trade all the way to downside. No, TPE it's 1 to 9, a good trade. So now the same thing has happened. So now let's just mark out our median time frame structure on the macro scale. So we have this high, low, and a high, lower high, a lower low, creating a lower high, a lower low, right? And then finally price comes here. And then we want to take out this high, right? We want to take out this low rather, and we've done that. Now that we've done that, price has every license, to go all the way back into this range. Now this is the high that I don't want to get broken. If this high gets broken, my bearish bias is over. Why? Because look at this. So if this is broken, my bearish bias is over. This is more like a bearish trend line, and it keeps getting respected. So if this high is broken because there's no other fair value gap above or whatever that we can use to take price back to the downside, then it's over. So I know this for a fact, and going by what I can see within this structure, you can see that we have had, using this structure, a low, a high, then a low at this point, a high here, a low, a high that mitigated this. So this is more like a mitigation structure for me. I'm not looking to take any sell from here, especially because this is more of like liquidity. So we had this low and finally this high. I'm sorry, this low. So now that being said, because this has given more like relative equalize, and this is how I got into my silver trade, and I did this directly. I didn't have to, you know, because a lot of people now would see this also and call it a multiple break of structure, 1, 2, and all of that, right? But there was no inducement because if you're looking at it, this is the break and this is the high that was created after the break, and price never closed back, so there was no inducement making this MBOS untakeable for me, right? So with that being said, I'm looking at a higher power or a higher level of interest, which is this. So this is how I took my trade on silver, and this is how the third trade was taken. And stop loss above this high right here, and TP again at its own external range liquidity, another 9 RR trade. And this is just how I take my trades on gold and on silver. So now coming to today, because we are still looking to take out this high, this low, right? What do I keep saying high? This low right here. Until we take it out, I'm going to be taking continuation trades, and that leads me to the 15-minute time frame, where I have either I take two types of continuation trades. And because right here, if you look at this low right here, this was an external low that was taken out, and if you look closely here, let me delete this I don't like. So if you look closely, this was a structural point. So we had price give from this high to this low, and then price reversed. Now my continuation trades can be taken when price is coming to take out this low, because any any low that was created where price was creating this lower low to this lower high, right? Any high created is more of like a higher high, higher low, higher high. So with that being said, I am watching out. I was going to watch out for this area, right? I was going to watch out for that area, and then price coming back down. I want to see price actually take a lower low out before taking this higher low, but nothing of that sort happened. So that made me discard this area, meaning I'm not looking at this area for me. So marking out the order structure, you can see that we have this low. What time frame are we on? No, 5 minutes, no now. So on the 15 minutes time frame, you can see we took out this low, then finally went back high, and then now we have closed below this. Don't be fooled. All of this is one structure. I'm not looking at the different structures. So following the ABC rule, this is an A, B, and C. And I will be looking to take my trade above this high. Why? Because there has been no MBOS. So if there's no MBOS, I'm going to use my ABC. This is the next area for MBOS right here. And if price takes this out with an MBOS without coming back to this upside, then I'll look to take a sell. So just two scenarios, just like on gold. So right here now, my inducement is here, and anything above that can serve as a draw on liquidity is what I'll use as my point of interest. And without going further, you can just see that we have this engulfed candle, engulfed bullish candle that would serve as an area of interest. So when price comes here, I go to the 5 minute, look for my confirmation, and I take a trade from this area to target the external liquidity of this structure. So that's what I'll be expecting on silver. I hope you guys enjoyed the video. Drop a like and appreciate. Thank you very much.